On Business Incorporated today, Africa and Middle East business-to-consumer e-commerce markets expected to grow by 22.38% to reach $104.1 billion in 2022. And Egypt says it is ready to establish an international center for supply and storage of grains. Zimbabwe's central bank penalizes top banks and firms in the country. Hello and welcome to the program. I'm Will Ibong. Let's begin, as always, with major equities from Africa, where sentiments were mostly negative at intraday. Nigeria's NGX was trading slightly higher by 0.1%, while the South Africa's JSE index dropped by more than 1% at intraday. Elsewhere, Egypt EGX was also in the red, down 0.27% at intraday, while the Nairobi Securities Exchange closed Friday's trading session also in negative territory. And in the Middle East, it's negative sentiments at intraday. The Abu Dhabi index tumbled 1.6%, while the Dubai index dropped 1.34%. And still within the region, Saudi Arabia and the Qatari indexes were in the red at intraday, both down 0.73 and 0.63% each. And now to Europe, a resounding victory for Giorgia Meloni and a right-wing alliance in the Italian elections, which are held over the weekend. Meloni is set to be Italy's first female prime minister and the first far-right leader ahead of Benito Mussolini. Janelle de Malone joins me from Berlin to share more insights on this. Janelle, what will this result from Italy mean for relations between Brussels and Rome, given that the EU support is an important pillar of Italy's economic recovery?
This is the big question in the room. Italy, of course, is the third largest economy in the European Union, and especially the country's $3 trillion debt mountain has been a source of potential worry within the bloc. What does it mean now that Eurosceptic populists are set to take power? On the one hand, there is a school of thought that Italy's dependence on European finance means that Rome will make an effort to keep relations with Brussels on an even keel. Particularly, we are talking about the 200 billion euros it has been allotted under the EU Pandemic Recovery Fund. The European Central Bank has also spent more than 10 billion euros in Italian bonds in the last 2 months. On the other hand, however, Meloni has spoken about making some changes around some of the terms around accessing those 200 billion euros. She has cited, for example, rising energy prices as a result of the Russian war on Ukraine as a reason to update these conditions, although she has been told that's not really on the table. So the outgoing government under Draghi agreed to reforms in order to get these funds approved. Reforms like encouraging more competition and cutting red tape. And now there are concerns that the progress or implementation of these reforms will be hindered by either Meloni's views or internal politicking between her party and her alliance partners. We are, of course, talking about Matteo Salvini's National League and Silvio Berlusconi's Forza Italia.
Also, but what has Meloni said in terms of economic priorities?
I've alluded to it briefly, but her coalition's programs had some strong populistic elements, like tax cuts for individuals and businesses, increasing spending on pensions and disability benefits, for example. They have also said that they want to protect Italian purchasing power. So in other words, they are looking to decrease revenue collection while increasing public spending, something that could put the already, again, severely indebted country in a much worse space, fiscally speaking. So Italy's public debt is estimated at about 150% of its GDP. The current situation with inflation and higher interest rates only making that challenge even bigger. So the new coalition needs to prepare a budget by the end of the year. Markets will be looking at that closely to see if Maloney and her partners will be able to keep themselves from going on a spending spree, and also keep concerns in check that her relative inexperience and lack of technical expertise could send Italy's economy down the wrong path.
So how have markets reacted to all of this?
This was a widely expected result, as such little change has made itself felt on the markets. Rather, analysts have been saying that the markets are still focusing on the macroeconomic picture concerning Italy for now. The problems that Italy had in terms of its finances are pretty well known. But what markets and investors are waiting for, apart from the presentation of that budget that I already mentioned, is the government's choice for finance minister. So there's a bit of confidence that this incoming government will kind of follow tradition and choose a safe pair of hands. Markets, for example, would not mind seeing current finance minister Daniele Franco continuing to exercise that position. But at this stage, it's also possible that someone is chosen that is closer to the coalition's line and that markets would consider more disruptive. At this stage, it is definitely wait and see.
Thanks so much, Janelle, for that updates. Thank you. And now we move over to the UK, where the country is still being rocked by the collapse of the pound against the dollar following the biggest tax cuts in 50 years. Now, Juliana Olayinka joins me from our London studio with more updates on this. Juliana, how are you doing today?
I'm doing pretty well, thank you. How are you, Will?
Well, it's good to be back on the show. Now, Labour are asking, we've seen the pound fall against the dollar, new fresh 37-year lows and more crashing lower, and the Labour is asking the city regulator as the Financial Conduct Authority to investigate whether leaks from the budget contributed to this. What are you hearing about this, and what more can you tell us about that?
Yeah, well, it's a pretty significant story, the story of the crashing pound, which started falling on Friday after Kwasi Kwarteng's, the Chancellor's mini budget. Well, we call it mini. It's been an explosive budget, and it fell to record lows of $1.03 in early trading in Asia markets. It's since kind of stabilized to $1.07, but there are so many moving parts to this story. I think I should give you the first one, which is a little bit of breaking news that I found out about just before coming into the studio. Discussed it initially with Innie, that the Bank of England is understood to be preparing an intervention after the pound crashed to that all-time low. This is according to the Telegraph, which is a paper very closely aligned to the Conservative Party. The bank is expected to issue a statement as soon as today, so any time from now, amid mounting pressure on Governor Andrew Bailey for an intervention to help shore up the economy. Now, you remember, Will, just last week Thursday, after a 7-day delay because of Her Majesty the Queen's death, the Bank of England raised interest rates by 0.5% to 2.25%. They could potentially raise it again this week. Now, that is going to send shockwaves into the economy, but it is something that has happened before. That happened, I believe, in the 70s, where twice, actually, the Bank of England had to raise interest rates in one day just to try and stabilise the pound, and that's where we're going to. Now, back to your question about the Labour Party. They are, of course, holding their conference in Liverpool. We actually had a resounding speech from Rachel Reeves, who's the Shadow Chancellor. Kind of sounded like a prime ministerial speech, I must say. Probably left Sir Keir Starmer, the leader, quaking in his boots, because, of course, Labour haven't had a female leader in quite some time. But on the sidelines of that, Tulip Sadiq, who is the Shadow City Minister, she has launched this investigation. Well, she's asked the Financial Conduct Authority to launch an investigation into whether or not Kwasi Kwarteng's mini budget was leaked to the press before it was announced on Friday. Now, this will have significant implications because, of course, there have been a series of economists and senior hedge fund managers who were apparently betting against the pound on Friday morning. So essentially, what is happening right now could have been created by those who are on really fat bonuses because they were privy to this information beforehand. If this is the case, then of course that is pretty serious. There was apparently some sort of dinner a week beforehand with hedge fund managers who were alerted to the fact that Kwasi Kwarteng could be abolishing the 45 pence tax rate. I know we don't have time, but this is a very important story. In a statement, Tulip Sadiq says the FCA should investigate any potential wrongdoing to determine whether it's possible that any leaks of information provided by this Conservative government to their wealthy friends contributed to the collapse of the pound. A weaker pound means that imports such as food and energy will become even more expensive at a time when inflation and the cost of living is already spiralling out of control. So this is a significant story here in the UK, and it does have many components to it.
Juliana, that's so heartbreaking to know at this time. And more sad news to come. I'm not going to break it, but the Organization for Economic Cooperation and Development has said the UK economy may grow slower than it predicted earlier. It's as if we've not had enough bad news coming from the UK.
Well, it's certainly news. I don't think it's news really to anybody that the global economy has suffered since the illegal invasion of Ukraine by Russia. In fact, OECD, which is a really influential Paris-based think tank forum, they have said that they believe it is going to cost the global economy over $2 trillion. That is a lot of money. And one of the reasons why the forum has kind of pointed out Germany, the UK and Europe as countries that will be most affected by this hit is because, of course, we are more closely associated to Russia and Ukraine, not just in proximity, but also in trade. Now, they have said that they expect growth this year in the UK to be at 3%, which in terms of international standards is pretty good. But next year, they said that they think the economy will be flat. Not great news for Liz Truss and the Chancellor when they're caught up in probably the biggest economic meltdown this country has seen for decades.
Well, so how are markets reacting to all of these sad news, Juliana?
Yes, I wouldn't call it sad. It's definitely alarming. The all share is down by 1.05%. The FTSE 100 is down by 0.85%, and the FTSE 250, the domestic market, obviously more embedded with the pound, that's down by 1.67%. And now, of course, the big news in the currencies market, a British pound at the moment will buy you $1.07. That's at an all-time low, although it was much early this morning. A British pound will buy you €1.11, and 1 British pound at intraday will buy you just under 155 Japanese yen in a Will.
Oh, that is. Thanks for your update, Juliana.
And Will.
Both of us together.
Thank you.
Thanks so much, Juliana, for your perspective.
Thank you.
And now, after the break, a look at Egypt's quest for affordable loans. And that conversation just right around the corner. To stay with us, this is Business Incorporated. Last Thursday, Egypt's Finance Minister Mohamed Mahit announced that the country is exploring other financing options just a month or two before it can reach at least a staff-level agreement with the International Monetary Fund, that's the IMF. The North African country says it is seeking to diversify its funding sources and has had discussions with some governments, such as those in Japan and China, to get cheap financing. Now, to get more insights into this, John Ashburn, global economist, Fitch Solutions, joins me from London to discuss this. Hi, John. It's good to have you here today.
Hello. Yes, good to speak to you.
John, we've seen that Egypt for the past couple of started in March, with talks with the IMF to get loans and funding. But right now, just a month or two before that, they're seeking alternative, affordable, cheap loans from China and Japan. What should we really make of this, seeing that the IMF has warned against loans from China?
Well, it's an interesting question. I think it really underlines two things. I mean, I think the first thing it underlines is the scale of the problem that Egypt faces. It has a huge current account balance deficit that it needs to fund. So Egypt is running a current account deficit of about $6 billion in the first quarter of the year. For the year as a whole, it'll probably be closer to $20 billion. That's the amount of money in investment and in funding that Egypt needs to raise in order to fund its current expenditure. And that's a lot of money to bring in. And so that's the reason why they've been going and searching for this funding from the IMF and elsewhere. And the second point, I think, is that because that's a huge amount that they need to raise, that the government's really trying to spread its risk and go to as many possible borrowers as they can. So they've gone to the IMF, as you said, they've gone to the states, the Gulf Cooperation Council, Saudi Arabia, states like that, and now they've gone to China and Japan. They're looking for as many sources as they can because they need this money quite quickly and they need to spread it across, if possible, multiple different sources.
Now, Egypt started this 7 years ago, borrowing from the IMF, and they promised economic reforms and the rest of them, subsidy cuts and things like that. But how close are they now to achieving economic stability and the reform they're talking about? If they're still borrowing and borrowing, how close are they?
Well, they still have quite significant problems, and the biggest one is because they have this large current account deficit, they need to have dollars coming into the economy consistently to fund that. And that used to be achieved by having a lot of foreign investment by private companies. So foreigners would buy Egyptian assets, and particularly they'd buy government bonds, and that kept a flow of dollars coming into the economy. But now that flow is dried up, and the reason that's happened is because of uncertainty about the Egyptian pound, about the currency in that country. The pound continues to weaken, and as long as the pound is weakening and people think will weaken further, they're very hesitant to put money into the country because they're worried that what will happen is they'll put dollars in and then the pound will weaken and they won't get their money back. And so I think the real problem in Egypt is the continually weakening currency. And as long as foreign investors see that as a problem, see that as being the direction of travel for the currency, it's very difficult to get them back into the market. And as long as foreign investors aren't involved, that leaves the government dependent on getting funds from people like the IMF or the governments of Saudi Arabia and the UAE and states like that. So the currency is really the key problem here, I think.
So how greatly linked is this problem to the Russian-Ukraine war at the moment? And do you think it's going to abate anytime soon?
Well, you're right. It absolutely has been made worse by that. I mean, you said that Egypt's been going to the IMF for years, that there are underlying problems. But Egypt's been hit by a shock, as many countries have, of much higher commodity prices. And in Egypt's case, the one that really matters is wheat prices. The country is a big importer of food, huge population, not a lot of arable land, obviously. And so at Fitch Solutions, I mean, our estimate is just the wheat that Egypt imports will be about $1 billion more expensive as a result of the jump in food prices caused by the war in Ukraine. So that's another $1 billion on top of everything else that Egypt imports that they need to now mobilize for this reason. So they've been hit by a shock, as all countries have in the world, but we should admit that they were in a bit of a fragile position before that happened, and that's why the attention's focused on them.
And so it looks like they're going to have a bigger burden on their hands now, especially with the high interest rate environment we are going into. So how big of a burden do you think Egypt is going to be in with this?
Well, of course, every increase in debt means that they take on, as you say, more repayment burden. But even so, I think that really stresses the importance of getting funding from institutions like the IMF or maybe from the Japanese and other states, because they'll be able to get a fairly low interest rate from the IMF. The IMF obviously exists to help countries get through difficult times. Whereas if the Egyptian government sells a bond today to investors, they're paying an interest rate on that bond of 19 or 20%. So it's very, very difficult for Egypt to raise money from the capital markets in the traditional way. And so that really puts the pressure on and creates the need for borrowing from institutions like the IMF, from which they can get a cheaper interest rate. But as you say, every dollar they borrow is a dollar they'll have to pay back. So this is storing up some problems for the future. Hopefully, though, if they can get money in now, they can bridge themselves to easier times in the future.
Thanks so much, John Ashburn, for your insights on the program and sharing your thoughts with us. John Ashburn, Global Economist, Fitch Solutions, thanks for coming on the program.
Thank you for having me.
Now, Egypt's foreign minister, still in Egypt, Sameh Shoukry, has expressed the country's readiness to cooperate with the international community in establishing a center for the supply and storage of grain in Egypt. The minister, who made this known at the just concluded United Nations General Assembly in New York, says the grain center in Egypt will contribute to solving the food crisis globally. However, he added that the food security crisis is a result of many years of failure of the international community to achieve the UN's Sustainable Development Goals. Africa and Middle East business to consumer B2C e-commerce market are expected to grow by 22.38% annually to reach $104.1 billion in 2022. According to the e-commerce market report for 2022, the medium to long-term growth of the B2C e-commerce industry in Africa and in the Middle East promises to be attractive, with a steady growth forecast of 15.19% from 2022 to 2026. Also, the region's B2C e-commerce gross merchandise value will increase from $85.1 billion in 2021 to $183.4 billion by 2026. Now, with various stores stepping up with their online services before the global pandemic outbreak in 2021, B2C e-commerce in the Middle East and North Africa, that's the MENA region, is swiftly catching up to global superpowers like the United States and China. Now, the Reserve Bank of Zimbabwe's Exchange Control Division has raided and penalized top banks and firms for violating exchange control regulations. According to the bank, some companies have failed to account for the United States dollars sourced from the central bank's foreign auction system. In a report, the Exchange Control Division said it conducted on-site compliance inspections across the country to check how the firms were using funds from the auction. The Apex Bank launched the foreign currency auction system in June 2020, and over $3.5 billion have been extended to support key imports of raw materials and machinery. According to the Reserve Bank of Zimbabwe, the Exchange Control Division continues to capacitate authorized dealers through training of staff to ensure that banks are adequately resourced to administer exchange control transactions consistent with policy. And that's it on Business Incorporated. Do join us tomorrow for same time for Business Incorporated. I'm Willie Bug. Thanks for watching.